So the market has shifted considerably comparing it to 2021, 2022. We started to see a slowdown in 2023 and definitely in 2024. And a lot of things are at play here. You know, the cost of living has skyrocketed post-pandemic. Things are costing 30%, 50% or double. So people's spending power isn't there. There's market uncertainty. The economy is kind of doing okay, but it's not great. And, you know, Vallarta is a second home market, like a lot of other Mexican resort destinations. Some people are retiring and moving abroad to Mexico, but some are just buying a rental property or their vacation home to come and go. So it's not a necessity, it's a want. It's a luxury for them to be able to afford this. Just like you don't need a Rolex. You have the money and you want one. It's not a necessity. You can tell the time on your phone or a simple $20 watch on your computer. You don't need a Ferrari or a Lamborghini, but you're in a position you could afford it. Times are good and you might buy one or two. But it's not a necessity. There are other wonderful cars out there. So being in a second, third home market, it's kind of along the same lines. So when the market shifts, when the economy is shifting, there's uncertainty, and the bulk of our product, our homes, our condos that are being built here are for middle-class citizens, middle-class Americans and Canadians, because those are our primary market here that we deal with. So when the market shifts, the economy slows down, there's uncertainty, the middle class tends to worry because the middle class tends to carry the economy, right? So what's happened in the last few years as we've shifted out of a seller's market and more towards a buyer's market, you know, sellers had to make some price adjustments. And that adjustment is a downwards trend. There's no sense of urgency, right? So what's going to take for prospective buyers from the States and Canada sitting on the fence, what is it going to take for them to say, okay, you know what, I'm going to buy? Price. I was here for the 2008 recession, and we really started coming out of it around 2011 when consumer confidence started to edge upwards. And we're kind of seeing the similar thing here, a recession-like market, where buyers are just kind of waiting until the price is good enough for them to feel this is too good of an opportunity to pass up. You know, some owners, some sellers, whether it's a developer or individual reseller, they're offering to pay for part of the closing costs or no HOA dues for 6 months or a year. New developments, they're offering maybe free parking or free appliance of some sort. You know, all of those perks might generate a sale or two, but in reality, it's going to come down to price. The number is going to be so good to pass up. When I say so good, it's so low enough that, you know what, honey, we've been wanting a condo like this. Finally, it's at that price point. You know, I think we should do it. And once our sellers, developers realize that the market has shifted, they've been more open to price adjustments, or lower payment terms, right? More favorable payment terms, especially in pre-construction, and lowering the price, you know, in general. We've started to see inventory move. Now, are they flying off the shelves? No. But are we starting to sell more? Yes. You know, with the new tariffs happening in the States right now, the war in Ukraine, what's happening in Gaza, you know, the economy slowing down, the exchange rate not being as great as it was, you know, in the last couple of years, in 2021, 2022, especially for Canadians, you know, the Canadian exchange rate, because we're in a primarily dollar market here. So for the Canadians to convert their Canadian dollars to US dollars, I mean, they're not getting much. You know, I think right now it's around 68, 70 cents for the Canadian dollar. I mean, that's a big pill to swallow. So I think until the exchange rate for Canadians improves, when we were historically around 82 to 85 cents per Canadian dollar, we would see a lot of Canadians coming back and buying. You know, again, we're a second home market. They don't need it. You know, I don't need it. You know, the conditions have to be right and I have to feel comfortable. So what does it take right now? It's price. And once we've seen prices adjust downwards to a reasonable market value, we've been seeing sales increase. And oddly enough, $1 million properties right now that are in the right location, views, great condition, they're faring off a lot better than prices geared to, between the 300 to 600,000. We didn't see that during the recession of 2008. The whole segment, the whole market, luxury and mid-range slowed down considerably, but it's a little bit different now. So I think it's going to be the price that ultimately is going to drive the sales, and that's exactly what we're seeing right now. If you're still stuck, for a seller, if they're still stuck at this is what I want, this is what it's worth, yeah, it is worth that. It was worth that, really, it was worth that. But in this market right now, that's not where we're at. It is what it is. It's cyclical. Then it'll flip in a few years, in a few months, who knows? I don't have my crystal ball around me, but it'll eventually flip. But if my encouragement, my message to owners right now is, we're in a very super price sensitive market. It's going to take a great price to move the real estate.